Good morning and welcome. You're watching Market Cafe on ET Now. I am Harsh Saita and with me is Ankita Saxena. Good morning, Ankita.
Good morning, Harsh. And we're twinning in pink.
Absolutely. Oh, I didn't notice that. So, very quickly, of course, Ankita takes us through all that's happening in global markets. So, let me take it straight across to Ankita.
So, Harsh, US markets were shut on the back of Martin Luther Jr. Day, but futures are largely have started with a negative bias. They are in the red. Look at Dow Jones; it's down largely flat, but down 0.04%. S&P 500 is down 0.1%, and Nasdaq is down 0.2%. Largely flat, but have started the day with a negative bias. Also, the US market, if you remember, on Friday, they ended the week on a positive note, which marked the second consecutive week of positive gains. And it has started, clearly they have started on a good note for this year. We look at the European markets, though the European markets closed up higher ahead of the corporate earnings that are about to start, and the World Economic Forum that has kick-started in Davos, where all the world leaders are meeting up to discuss economic instability, inflation, the Ukraine war, and so on. So that's going to be in focus for the European markets for this week. The European markets closed up yesterday. The Pan-European Stock 600 was up 0.5%. DAX was up 0.3%. FTSE and CSE was up 0.2% in trade. So that was a roundup of US and the European markets. Harsh, how is the crude faring right now?
Well, at the moment, we're seeing crude, Ankita, largely flattish, but it has gained quite substantially from those sub 75 levels, if I can call it, where WTI was at, and very well below the sub 80 levels where Brent crude was at. But at the moment, slightly flattish or tepid is where crude is. But mind you, we've seen a good rally in crude already, and that's on the back of a couple of factors that are playing out. One is the dollar index has cooled off and cooled off quite sharply at it. I'll request the producer to flash the dollar index in front of you for context. It's at 102 roughly at the moment. That's quite a sharp decline where the dollar index is concerned, and that will keep crude oil prices slightly elevated. The other piece, of course, is China reopening and the optimism on the back of that. We did see that the Chinese demand has actually risen by 4% year on year in the month of December. So keep your eye out on that, and as China continues to reopen and as demand expands, the supply is set to tighten a bit and prices will tighten along with it. So at the moment, we're seeing crude roughly just below the $80 mark is where WTI is. Brent just below the $85 a barrel mark. That's where we're at the moment. But I'll take it back to Ankita on the key events to watch out for today.
Thank you, Harsh. Now, quickly, key events that you need to watch out for today are, we have the UK jobless claims, the unemployment data that's likely to come out today. We also have the Eurozone CPI and PPI numbers, very key inflation data point that is going to come out today. Also, we have China retail sales, the industrial production, and the GDP numbers that are due for today. We also have a couple of corporate global earnings. We have Goldman Sachs, Morgan Stanley, United Airlines that are due for the earnings. And we also have earnings season going on in the Indian markets. We have ICICI Prudential, ICICI Lombard, Delta Corp, Metro Brands that will come out with their corporate earnings as of today. So these are the events that you need to watch out for in today's trading session.
Well, we will keep our eyes out on that one, Ankita, but we'll quickly move on to global stories. OECD Secretary General Matthias Cormann said China's reopening is overwhelmingly positive in the global fight to tackle surging inflation. He said that over the short term, it will come with challenges and more coronavirus cases. However, he said that over the medium term, it will help both supply chains and trade.
And China's economy is expected to have slowed sharply in the fourth quarter due to stringent COVID curbs. This dragged down the 2022 growth to one of its worst in nearly half a century. This slump also raised pressure on policymakers to unveil more stimulus this year. GDP is projected to contract 0.8% in the fourth quarter compared with growth of 3.9% in July to September.
Well, and the International Monetary Fund said that fragmentation could cost the global economy up to 7% of GDP. The long-term cost of trade fragmentation varies from 0.2% of global output to almost 7%. This is roughly the combined annual output of Germany and Japan, mind you, part of the top 5. The IMF does not expect all countries to feel the impacts of fragmentation equally, of course.
And Bank of England Governor Andrew Bailey warned that China's sudden lifting of COVID restrictions, the fallout of the war in Ukraine, are high on list of dangers facing the UK economy and inflation outlook. Bailey also said that China's reopening will have a negative impact in the short run on the world's second largest economy. He also said that the officials at the UK Central Bank are keeping a very close watch on it.
Well, and German defense minister tendered her resignation amid scrutiny over Berlin's response to the war in Ukraine. Her step down comes as Germany mulls whether to approve an increase in military support to Ukraine in order to help Kiev's armed forces prevail against the Russian onslaught.
And the European Union's rejection of Russian energy commodities following Moscow's invasion of Ukraine won't last forever. This is the word coming in from Qatar's energy minister. Gas exports from Russian state energy giant Gazprom to Switzerland and the EU fell by 55% in 2022.
And let's move stock specific. Toyota Motors said it would produce as many as 10.6 million vehicles this year. They also warned of a downward risk to the projection from the possible impact of issues such as part supply shortages and of course COVID-19. The car giant said that it saw a downside risk of about 10% on that baseline production volume.
And all you keen market watchers, you must have missed the rally in another asset. Now make that two actually. After underperforming for much of 2022, gold and Bitcoin are back in the green. Gold is now trading 14% higher on MCX while Bitcoin has regained $21,000 levels. All other cryptocurrencies are up there with Bitcoin. And so what's the outlook for these asset classes for the rest of 2023? We have, also did you know the top 1% of Indians held more than 40% of nations' wealth, and the wealth share keeps growing while the poor continue to struggle for the basics. OXFAM has now suggested that India tax the super rich to make resources more equitable. Vikram Oza explains what the report recommends.
Several economic trends have emerged after the pandemic and the beginning of the 2020s, and one that's really hard to ignore is the rise of wealth among India's billionaires. The 2023 OXFAM report suggests that billionaires increased their wealth by an average of 121%, while the bottom 50% of the population have seen their savings depreciate during this exact time. It obviously raises the question again, should India focus on taxing the super rich? What impact will that have for equitable access to resources? That's exactly what we are looking to explain today. Let's bring up these numbers. Those numbers that are coming up on your screen look quite astonishing. 1% or 1.3 crore people own more than 40% of the nation's wealth, while the bottom half of the population, that's around 70 crore people, own just 3% of the nation's wealth. And what's worse, just 21 of the top richest people in the country own more wealth than 50% of the country put together. For years, the super rich have had the privilege of not paying their fair share of taxes. Here are some recent trends. The report says only 3% of tax came from the top 10%, while 64% of GST collections came from 50% of the population at the bottom of that wealth list. So simply put, billionaires or centimillionaires have seen their wealth increase exponentially, while their share of taxes actually went down. Let's bring up Gautam Adani, India's richest man, and his wealth accumulation that we've been reporting on, the kind of wealth accumulation we've seen in 2022, just last year. While the rest of the world fretted over high cost of living and rising interest rates, Gautam Adani has managed to increase his wealth by more than 34%. And that's billions of dollars, really, that we're talking about when you talk about 34%. Then there is Mukesh Ambani. He's not new to topping the list of the wealthiest in the country and the world. Whether it is a compilation of Indians or the global super rich, he's there on that list. While his wealth remained largely flat last year in 2022, he still remains the second richest Indian and is 3 times richer than the third richest Indian. OXFAM cites the data it compiled to tax the super rich. This is what the world would look like in a more equitable economic scenario. A one-off 5% tax on India's top 10 billionaires could go ahead and support all children to return to school. A one-off tax on Gautam Adani's unrealized gains from the year 2017 to 2021 could employ more than 50 lakh teachers for a year. The government could provide nutrition security to the entire country for 3 years if it levied a 2% tax on all its billionaires. The union budget is around the corner and the middle class is lining up to get some tax relief. While the government may not have the funds it needs to cut taxes for them, it could explore the possibility of taxing the ultra-rich 100 Indians. And that would fund the entire union budget for 18 months. Again, to put this simply, the Oxfam report makes a strong case to tax the super rich. But that could come with its own challenges. The biggest challenge being that there could be an exodus of funds to more tax-friendly nations. Oxfam has come up with some ways to avoid the migration of wealth holders to other countries by implementing a progressive tax system. It has also recommended the introduction of a wealth and inheritance tax because it observes that this is the best way possible to ensure equitable distribution of wealth. It suggests a one-off windfall tax could also be considered on the top 1%. The Indian middle class has been paying its taxes diligently for years. Salaried employees like you and me should be rewarded for a career that pays for India's growth. So how about giving us a tax break for a year? The Oxfam report suggests a permanent increase in taxes on the top 1% could make that possible. It also calls for a raise on the capital gains taxes on equity returns to make wealth distribution more equitable. And that could enhance budget allocation for health, for education, which of course have seen being underinvested in India. Unless you are in the top 1%, this must seem fair. But is the government listening? And more importantly, will it act before India's wealth is more concentrated in the hands of the super rich?
Well, thank you so much for that, Vikram. Great perspective as always that he brings us. Now, very quickly, we did speak about 2 asset classes which have really rallied at least at the start of this year, which did really nothing much in 2022. In fact, were underperformers. One, of course, is gold and the other is Bitcoin. We have a quick, set of experts weighing in on a couple of these asset classes and where they see it going in 2023. Listen in.
It seems that interest rate expectations are moving in the right direction. That's meaning lower yields, and that's being very bullish for gold. And if we get that risk-averse environment on top of some of those things, if some of the economic data or the earnings season, for example, doesn't do well in the shorter term, then that could still continue to support the yellow metal on this time. I also think cryptos are probably benefiting a little bit as well from the fact that I think, if I'm not mistaken, they really did miss out on that bit of upward momentum we saw in risk assets a couple of months ago. That would kind of happen around the same time where the FTX fallout as well. So while other riskier assets and equity markets, for example, were doing quite well, cryptocurrencies seem to miss out on that. So I wonder if there's a bit of catch-up effect at play as well, because Bitcoin and other cryptos over the course of the last 2 weeks have performed extraordinarily well.
Easing inflation allows central banks to be less aggressive. That allows for more of a lending. The combination allows for speculative assets like cryptocurrencies to go up along with risky assets like equities and credit spreads to come in. Meanwhile, gold is also being supported by all of those phenomena, plus the idea of the geopolitics and the continued move by central banks into more gold. If inflation is falling, right, then real rates are going up, of course, which is not necessarily good for equities or for crypto assets or for gold for that matter. But if that is being accompanied by disinflationary slowdown that allows for this kind of idea of a soft landing or soft-ish landing, that could be good for equities and probably supportive for crypto as well, because again, it implies less aggression from the Fed and the ECB and others.
On that note, it's time for us to slip into a short break. You don't go anywhere. There's lots more action coming up on the domestic front on the other side. Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is Harsh Saida. Let's quickly move on to what's happening on the domestic front. Union Bank of India may start roadshows by next week for 3,500 crores of QIP. ET Now has learned from sources that 3 investment bankers have been hired and the bank plans to raise 7% of government stake through QIP. My colleague Ankur Mishra brings in further details on this. Over to you, Ankur.
Yes, Union Bank of India is aiming for a QIP issue of up to rupees 3,500 crore. Now, what we understand through sources that roadshows for QIP is likely to begin by next week itself. That means the preparations have been made, and we also understand that 3 investment bankers have been hired for QIP. As far as the size is concerned, that is going to be up to rupees 3,500 crore, and the pricing for QIP is likely to be decided by next month. Bank wants that government stake, which is currently at 83%, may come down to 75% or so after the QIP. Therefore, the bank is looking to pay a stake of around 5 to 7% of the government, and also it wants to increase the floating in the stock, which is currently around 10% only, and after QIP it is likely to increase. Therefore, the whole idea is to complete the QIP of rupees 3,500 crore by current fiscal itself, and for that now all the preparations have been made. We need to wait and see that whether a bank is able to complete this QIP in the current fiscal or not.
Well, thank you for that, Ankur. All eyes on Union Bank, which was up over 5% in trade yesterday. But quickly moving on, we've got some interesting data put together for you. What are D Street veterans buying, selling and holding in the month and the quarter ended December? Sharad joins in with all of those details. He's been compiling all of that. Sharad.
Kishan Damani, over here we see he has actually reduced his stake in VST Industries by almost 180 basis points, but 2 new entrants coming into the list, Andhra Paper and United Breweries. So he has added these positions earlier. These positions were not mentioned in the shareholding pattern. And apart from this, now let's move on to ace investor Ajay Kedia's portfolio. What has been being bought in the month of December, or let's say the quarter of December, and we see over here almost Tejas Networks and Talbos Automotive. There is a change happening over here, and for Lycus also they have cut down their stake, so that is something which we'll be looking out for. Apart from this, now let's focus on rare enterprises, the overall most of the entities which would be in focus. And over here we see Canara Bank, NCC, Tata Communications. The stake is being risen between 20 to 60 odd basis points, but a bigger name, Titan and Man Infra, they would be also in focus because there has been a reduction in the shareholding, especially for Titan, where earlier the stake was almost at 5.5%. Now that has come down to 5.2%. Apart from this, we also have Ashish Kacholia's investment pattern we see over the month of December itself, and 2 new entrants coming in, Goldium International and the second being Raghav Productivity. Apart from that, a new addition coming in for Agarwal Industrial Corporation as well, but couple of exits as well from D-Link. We are seeing almost 120 basis points cut in shareholding pattern, and also in Hindware Home Innovation, where the cut is much bigger.
So, well, thank you so much for that, Sharad. Moving on, Adani Group has pledged to grow 100 million trees by 2030. This pledge was made on 1T.org, the Trillion Trees platform of the World Economic Forum. Gautam Adani's group commitment to growing 100 million trees by 2030 is the largest 1T.org pledge in India so far and amongst the most ambitious corporate pledges globally. The 100 million would include mangroves as well as terrestrial trees. Adani Group Chairman Gautam Adani said, and I quote, "Restoring ecosystems, reversing loss of biodiversity and reducing soil erosion are all essential for building a greener world. And in this context, I am pledging that the Adani Group will plant 100 million trees by 2030 as a part of India's declaration to take a leading position in its commitment at the Paris COP21 to create additional carbon sinks of 2.5 to 3 billion tons of CO2.
Well, very interesting there and much needed, isn't it, Ankita? But quickly moving on, we have a power pack lineup for you for the market, which is a show which comes after this. We have Sridhar Sivaram, who's going to give us a perspective on where markets are and, of course, where do we go in 2023. Then we have Arnab Banerjee, who's the CEO at Seat Tires, to give us a lowdown on the tire industry and how auto is doing. And lastly, at 10:15 a.m., we have Shyam Srinivasan, who's the MD and CEO at Federal Bank, who's going to give us a lowdown on the results of Federal Bank. At 10:20 a.m., then we have Rahul, who's the Colte Patil Developers CEO, who's going to give us a perspective on how real estate, of course, is doing after a record quarterly sale by the developer. But that's what we have for you going forward. But with that, we'll slip into a very short break. Of course, more stock specific on the domestic side going forward. Welcome back. You're watching Market Cafe on ET Now. Now, quickly moving on, we'll take stock of where Asian markets currently are sitting, and we see the Nikkei up 1.3%. But other than that, we're seeing Asian markets largely flat or, in fact, negative in trade. So Nikkei is probably the only index in the green at the moment. We're seeing the Shanghai down around 0.1%, the Hang Seng down 0.75% as we speak, and we're seeing losses on the Kospi as well, down around 0.33%, and the ASX 200, which is going to come straight up, is down around 0.1% or thereabouts. That's where we're at the moment. Largely Asia in the minus, and we're seeing the SGX Nifty flickering between positive and negative. We're seeing the SGX Nifty at the moment absolutely flat, but with a slight positive bias, up 6 points, but it's flickering between positive and negative. So let's see how the open is. Yesterday, of course, the open was in the green, and then we slipped well into the red. So interesting to see where we'll be at today. But at the moment, that's where we're at, where Asian markets are.
Well, a rather muted start indicated by the Asian markets. Now, moving on, the government has reduced windfall tax on crude oil once again, even though the petrol exports still remain out of the windfall tax ambit. My colleague Somit gets in more details. Over to you, Somit.
Well, this is the 13th review of the windfall tax since its imposition back in May that we had seen. Now, government revises this windfall tax every 15 days, and this time they have reduced the windfall tax on export of diesel and ATF, and also on production of crude oil. Now, when it comes to diesel, the export tax has been reduced from 5 rupees to 3.5 rupees. Obviously, there is another road infra cess of 1.5 that is inclusive, or that is included on this. So the total windfall tax comes down to 5 rupees from 6.5 rupees earlier. And when it comes to ATF, it has been reduced by 1 rupees, that is from 4.5 to 3.5. And petrol, as you mentioned, continues to remain out of the windfall tax ambit. And when it comes to crude production, the taxes have been come down to around 1900 rupees per ton from 2100 rupees per ton. Now, why this taxes have been reduced from the earlier rates? Because we have seen a slight correction when it comes to Brent crude, around $2 per barrel, a correction that we have seen in the Brent crude prices. Also, the Singapore gross refining margin, that is the Asian benchmark, has also come down from $11.3 per barrel
to $9.5 per barrel. So largely the impact on any of the companies that are exporting diesel and ATF and are producing crude would be neutral, because the taxes have been reduced to factor in the reduction in crude oil prices and the Singapore gross refining margin. So largely a neutral impact on ONGC, MRPL and Chennai Petro is what we are expecting because of this reduction in windfall taxes.
Thank you so much for the roundup, Somit. But we'll just not let you go away like that, because Citi has initiated the pair trade on Bharti Airtel and Indus Towers, and you're tracking it very closely, Somit. Tell us what our audience needs to know.
Well, the pair trade is on Airtel and Indus Towers. They are overweight on Bharti Airtel while they are underweight on Indus Towers. Now, why they are overweight on Bharti Airtel? Because in the last 1 month, if you see, the stock has corrected close to 10% owing to no tariff hike, chances of higher capital expenditure because of 5G implementation, and also because of expensive valuation. However, the brokerage now believes that post this correction, the risk reward is attractive when it comes to Bharti Airtel, and all the concerns are largely overdone when it comes to Bharti Airtel. And though they are also saying that though there was no tariff hike at the end of calendar year 2022, the brokerage sees a possibility of a tariff hike in the next couple of months, given the fact that inflation is easing out in the country. Also, the concerns regarding higher capital expenditure is largely baked in the current valuation, and it is also expecting the company's ARPU, that is average revenue per user, to grow organically, that is 2G users getting converted into 4G on Airtel's network. Now, why it is underweight on Indus Towers? Now, a delay in fundraise for Vodafone Idea means that the receivable issue will continue to persist when it comes to Indus Tower, which in turn will impact Indus Towers' free cash flow, and lower free cash flow means lower dividend payout for Indus Towers, which is the key attractive thing for this company. Along with this, the brokerage also sees limited growth drivers going forward for the company, as development of standalone 5G towers is still might take time because the telcos are still not monetizing their 5G operations. So because of lower growth options and a lower dividend payout, the brokerage is underweight on Indus Towers and they are overweight on Airtel.
Well, thanks so much for a roundup on both those stories, Somit, but we'll quickly move on. Morgan Stanley has initiated or has put out a view on the banking sector, and 2022 was a solid year for banks when it comes to the numbers, and they believe that 2023 will continue to be so, especially where earnings are concerned. What they're suggesting is that the earnings growth will continue through this year, and they're expecting credit costs to remain benign. They're expecting mid-sized private banks and state-owned banks to normalize where it comes to their growth as well as their profitability going forward. What they're also suggesting is working capital demand will start to pick up and will start to see improvement going forward, and they're expecting the larger banks to gain share on better funding costs. They are also expecting a strong core PPOP growth, which is pre-provisioning operating profit, in the coming year. And where it comes to specific banks, they are preferring ICICI, Axis, Bank of India and BOB as the two in the private sector and two among the state-owned banks. That's where we're at.
Right, Harsh, that's a sector you very closely track. Moving on, we also have Lisa in the studio to tell us about what are the stocks that you need to watch out for in today's trading session. Welcome, Lisa. Good morning. And do tell us what are the stocks that we need to watch out for in trade.
Yeah, first of all, good morning. And starting with Siemens, they have been awarded a significant order in locomotives project, and the orders are worth rupees 26,000 crore, making it the single biggest order that the company has won in its history. Siemens will be delivering 1,200 electric locomotives and will be providing 35 years of full service maintenance, and the deliveries are planned over an 11-year period. Moving on to M&M, Mahindra has launched its first C-segment electric SUV, which is the Fast and Furious XUV 400, starting at around 16 lakh. They plan to launch around 20,000 units within a year of its launch, and the bookings will commence from Jan 26th. Of this month. And Tata Metallics has seen some buying from Morgan Stanley Asia Singapore. They have bought around 1.98 lakh shares, which is around 0.63% of the share capital at rupees 834.67 per share. Ashok Bilkon has received the provisional certificate for NHAI's HAM project in Telangana. India Pesticides has commissioned herbicides technical molecule at UP plant. That makes it the 7th molecule which is launched by the company, and the molecule is exclusively for its export market. Triveni Turbines tender offer buyback opens today and it will go on till 31st Jan. The offer size is around 190 crore and it is at 350 per share. Lastly, on Adani Power, they have updated on the DB Power acquisition and they have extended the date to Feb 15 for closing the deal. So these are the stocks that investors will focus on today.
Well, a good chunk of stocks there, Lisa, that you've pulled out. But, you know, you've also been going through some of the key brokerage notes that have come through today morning. Talk to us about the brokerage notes that you've been going through and what are the key takeaways from it.
Yes, absolutely. Starting on the post-earnings report by Morgan Stanley, they have reported on Federal Bank and have maintained an overweight on the stock at a target price of around 170 per share. That entails a 25% upside from the close price. Along with a strong beat in Q3, what is surprising is the NII growth, which was 27% on year-on-year basis. Also, the management has raised the net interest margin guidance to 3.35 to 3.4%, and even the ROE has been raised to 1.35% for FY24. Well, on the back of this positive guidance upgrade, they have raised the EPS by 5 to 12% in FY23 to 24. Moving on to Motilal Oswal on Apollo Hospital, they have maintained a buy on the stock at a target price of 5,600 per share, which entails an upside of 31%. They say that Apollo has delivered phenomenal performance of more than 3 times in the last 5 years, and the company has also reported 24% EBITDA CAGR growth. They have also reduced the net debt by half, and also the pharmacy outlook looks attractive with aggressive expansion. Lastly, on Credit Suisse on L&T Finance Holding, they have maintained a neutral on the stock at a target price of 94 per share. They say that the write-down of wholesale portfolio that mitigates the future asset quality concerns. However, the excess capital is likely to wait on the ROE. They maintain that FY24 is a year of transition and it will strategize to improve the profitability. On the back of this, they have increased the EPS of FY23-25 by 1 to 6% and have also assigned a higher multiple, PB multiple or one time on faster realization. Well, these are the brokerage notes for today.
Well, thank you for that, Lisa. Those are the brokerage notes coming in this morning. Let's quickly move on to Avenue Supermarts that was languishing in trade yesterday. It was down almost 4.5% in trade. Now remember, the company came out with its Q3 earnings on Saturday, but what are the factors for its fall? We have my colleague Vinny who tracks the sector very closely. Over to you, Vinny.
Yes, Q3 numbers were weak, but when you overall look at the numbers coming in and just look at the valuations first, let's talk about that. The peak valuations we saw coming in for the company was in 2021 October. 166 times was the valuation in terms of PE for Avenue Supermart, and currently now it's only 78 times. So 53% decline that we've seen coming in terms of the valuations for the company since the highs. Even market cap eroded is around 1 lakh crores. Market cap is eroded in that similar period as well. And just look at Radhakrishnan Damani's net worth as well. Now this is according to sources from Bloomberg that we've picked out. That is also eroded around 51,000 crores is what the erosion is there in terms of his wealth in rupees. Now what is the main reason for Avenue Supermart falling as well? When you look at it in terms of impact of inflation, that's a factor coming into play, a big time factor that comes into play for the middle class users as well and households. That those are impacted mainly, and that is a factor that is really impacting Avenue Supermart. Other than that, in terms of there's a change in the mix, from discretionary FMCG side. So, when discretionary is not doing that well, they're not earning too much, and that is what is impacting the margins of the company. So, yes, that's a factor coming into play, the change in revenue mix, which is impacting the margins. Slower recovery is seen in the general merchandise segment as well, and the pace of growth that we've seen coming in from Avenue Supermart in the last 4 quarters actually, that is also seeing a reduction in terms of the pace of recovery for the store opening. So yes, that is a factor coming into play as well. Overall, Q3 was a weak set of numbers that came in from the company, mainly discretionary category, what impacted the company. They also highlighted that the non-FMCG sales growth was below expectations for the company. So keep an eye out on Avenue Supermart today. These are the main reasons which is impacting the company's stock move as well.
Well, thank you so much for that perspective, Vinny. Of course, Avenue Supermarts down nearly 5% in trade yesterday. Need to keep our eye out on that today. But with the SGX Nifty down just about 4 bips, we'll leave you because we're completely out of time on this edition of the show. From Ankita, myself, and the entire team that puts the show together, thanks so much for watching. Of course, the market on the other side, so stay tuned.